COMS sovereigns, COMS, may actually be prepping for a downside continuation here in a trading range. So let's go ahead and find out exactly what I mean within this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COMS technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. But with that said, let's go ahead and dive right into the charts. Okay, so we have COMS up in the daily chart here, and excuse me, I actually noticed that we are potentially building something that can have an upside. I mean, it's going to take some time because I don't see that COMS has, or unless actually, you know what, unless any of my fundamental analysts know of anything that's coming up for COMS in the near future as a catalyst, let me know down below. But as far as this trading range, it looks like there could potentially be a continuation onto the downside. And there is a gap here that has a range of between about 7 cents to so between 725 and 763 of the 7 cent area. Okay, so there is a possibility to where sentiment may want to come down here and close this, possibly wick down to this candle closure here, and then continue on to the upside. Okay, so within this formation, I do think that we are forming this descending triangle. And I had a very thin line here. This actually, it's because I initially looked at the price action and I thought this was a symmetrical triangle, but you usually need about 2 consistent touches aside from the starting point in order for you to validate what formation you're in. So in this case, if we do it as a right angle triangle or a descending triangle like the trade calls it, we do have several touches of the support bottom right here alongside the hypotenuse of the triangle. It actually has 2 very consistent tests. So this is what's leading me to believe that there is a range now that we're going to be trading in. Now, the good thing about this triangle is the good and bad thing actually is that it does have both a bullish and a bearish price objective. But in this case, the price objective would actually lead into I mean, anything's possible, right? But we're just gonna go ahead and mention it. In order for us to gain the price objective, we actually take a trend line from the hypotenuse of the triangle to the lowest point of the triangle, and we apply it to where we break out from. Okay, so now usually triangles tend to realize when they're about 70 to 75% to the apex of the triangle. So let's just go ahead and see, let's just do it around here, right? So let's just say that we're looking at a breakout from this point here. It is suggesting a top of about 27 cents, which is very much in confluence with all of these candles here. Excuse me, as a form of resistance, right? So now, the fact that there is so much confluence here makes me feel that if we pulled up Fibonacci ratio, it would actually be pretty consistent to that, right? So let's look at the range here. So from the swing high here to the swing low here, we're looking at a touch of course, it's taking us literally to the 4-spot 618 at 27.39. So now we have several confluent things happening within this price action here, okay? So now this, but remember, if we're following this pattern based on just the the playbook, then it is, this upside is contingent upon the formation's realization and breakout at upon the 70% to the apex. Okay, so let's go ahead and move on to the next chart now and see what, actually, you know what, let me just pull up the SMAs just in case there is something up there, like the 2, of course. So the 200-day moving average would eventually reach around this area as well. So as if we continue this price action, the 200-day could actually be making sort of something like this. Watch. So I'm going to do it like this and then make a corrective move to how that indicator is moving. So I'm going to leave it just like around like this so that we can just see the type of trajectory that it may or may not have. Okay, so we'll leave this as a line like that, right? And then we'll also just increase the thickness so then we could see that it is implied. Okay, so yeah, there's very much a lot of confluence within this area. So in this chart, we can actually see, this is the daily chart as well, but from a different perspective, we can actually see that we have the 7-day exponential moving average, the 50-day, the 10-day simple moving average. This is the 30-day simple and the 30-day exponential. We have all of these as a form of support. Okay, so the fact that we have the 50-day, or let me see which one this is. Yeah, so this is the 50-day simple moving average. The fact that we have it right at the 0.618 at 727 makes me feel like we may actually touch this and continue on to the upside. Now, if that is sitting at 7 cents, 731, let's go back to this chart and take a look at this gap. There we go. Take a look at that. 731, right at the bottom of that gap, which is confluent to the 0.618 2-hour Fibonacci retracement here, right to the penny. So this is making me feel like for sure price action is suggesting a continuation down to the 0.618 before a continuation onto the upside. Okay, so now this is the descending channel that we were riding for a while. And also descending broadening wedge. This was a very complex breakout because it needed confirmation of several forms of newly converted resistances into support before continuing. Okay, so it has since done that, and this is looking is looking arguably pretty good. Okay, so this chart is not anything that I really want to talk about other than the fact that we are looking at resistance from the 1.618 from this time frame, which is the 8-hour chart right over here. Okay, so you're looking at the 1.618 resistance at about 9 cents. So there is a potential to where we can rise to the 9-cent area and continue our descent. Okay, this is a very strong Fibonacci ratio to look at, the 1.618. All of the 618s are the golden ratio, the golden mean, right? Okay, so now for the final chart, this is the RSI that we're going to be looking at. Okay, now I'm going to actually pull up the image here for you guys to be able to tag along as well. This is actually a new addition that I'm doing to the videos now so that you can be able to not have me explain and talk, just rather have it here on the side for us to verify what we're talking about. So the last time we were talking about this, we identified 1, 2, 3, 4, 5 primary drives of hidden bearish divergence. So that happens when the RSI signal is making higher highs and the price action is making higher lows. So this is the bearish hidden bearish divergence right over here. You can see the higher lows on the price action and the higher highs in the RSI signal. We got several drives of which are now in play. Excuse me, guys. So we were able to see COMS having a downside days ago. Okay, so now let's open up a multi-pane right over here. I also made a diagram here for the new viewers so that you can be able to see what my RSI profile looks like. So these are the 4 zones, and these are those 4 zones right here. Okay, you guys, so I'm going to leave this like this so you can be able to tag along. Let's open up that multi-pane and get that bias for direction in the immediate short term to the medium term. Okay, so we're going to do the 30-minute RSI first. The 30-minute RSI is suggesting a continuation to the downside. Now, we do have to pay attention to where we're sitting within the zones. So we're in the middle of a zone right here. So this is very likely for us to continue to the downside. We have the 14-day moving average here for the RSI, which is a fixed time frame. No matter what chart you're in and what time frame, this will always be a 14-day average within the time frame that you're in. Okay, so we are potentially going down, and it looks like we can use this as a form of support. But the thing is that when we try to use this as a form of support, we are then in the deep areas of the bear weakness percentile, which means that we are likely to be gravitated into bear strength. Okay, so now if we look at the 15-minute micro time frame, it may be the same. Let's see. Yeah, it's the same. It's already actually making a bearish cross below the moving average. However, it is within the shallow areas of the bear weakness. So this could be corrective before finding some upside. Okay, because we have been using the RSI moving average as a form of support. But in this case, it is penetrating it, so the likelihood of going a continuation onto the downside based, of course, on the technicals and raw price action that we talked about it's very likely for it to find some downside. Okay, so now the buy hourly is this is giving us no, okay, when it's sitting here in the middle of the RSI, you guys, and we're getting sort of a flat signal like this, the time frame is not giving us a good indication or bias for direction. This is neutral, okay? So let's not give this any credit. Excuse me. So now we're going to look at the 6 hour. The 6 hour is also with a very slight pivot to the upside. The good thing is within this is that we are in the middle of the bear weakness percentile with an upside pivot, which means that this is likely a corrective move. Okay, so we can actually find some upside. And now the daily is actually what's really catching my eye here. The daily is failing the bull strength percentile and now has entered into the bear weakness percentile. Now, the good thing here is that on our descent for the RSI signal versus the RSI moving average, if we continue on to the way down and use this as a form of support, we can actually see the realization of what we were talking about within this chart here and the previous chart. So this drop to the 0.618 continuation up, and also drop to the gap fill and continuation up. Okay, so this is the suggestion that I'm getting from the indicators versus price action and technicals. Okay, so know that I'm not a financial advisor. Please take whatever I do show and iterate within these videos as a form of entertainment. I need you to do your own DD because I can't actually suggest for you to buy or sell any assets, okay? So I think this is a pretty good place for me to leave off. If there's any questions or concerns, don't hesitate to reach out to me on Twitter or Discord. I'll make sure to leave the links in the description below for you to consider joining the Discord trading community called ARCa. Okay, you guys, but with that said, I wish you well, a good night, and I will catch you at the bell mañana. Adios.